Okay.
Hello everyone and welcome to this special event Pro Trader webinar with Doug Pless. Doug is a pro trader on the Bookmap Discord and has been presenting with us for a very long time now. He regularly presents Mondays and Wednesdays at 1:30 Eastern Standard Time, and he's kindly donated this session to you all to explain the liquidity heat map and how he uses it in combination with order flow from Spotgamma. This webinar is part of the Pro Trader series, exclusive to the Bookmap Discord all week. If you'd like to find out more and you'd like to see the full schedule of events, head to the chat within this channel and click the link that I have just posted. So over to you, Doug. Thanks very much.
Thank you, Dan. So today my presentation is part of the Pro Trader webinar series this week, focusing on liquidity and the heat map and Bookmap. So again, this is part of the Pro Trader webinar series and focusing again on the liquidity heat map. And this is my normal presentation time, which is Monday and Wednesday, 1:30 p.m. Eastern Time. And before I go any further, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. And the best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. I'm also on X. My name there is @DougPless. Just want to let everyone know that Bookmap is currently having a 4th of July sale. Up to 50% off of Bookmap Global Plus and data, and that lasts through July 11th. You can scan the QR code for more information. What I'm going to do today is I'm going to go through my normal content, normal routine with a focus on liquidity. So I will be spending quite a bit of time. So I normally trade based on order flow in Bookmap and hedging flow on Spotgamma Hero. And I'm combine the two to make my trading decisions. And part of the order flow on Bookmap is the liquidity heat map, and I will focus on that today, but I'm going to go over my entire process today. So for those of you who may not be familiar with the way I trade, here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price of many stocks and futures, and that certainly applies to the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. So the focus of my presentation today is going to be options order flow with a focus on liquidity and the impact of options markets on stocks and futures and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow and Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on the underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. And questions and comments are welcome. And I should have updated the slide. You will need to post in the special events for today. So I'm watching the chat in special events today. So here's my agenda for today, Monday, July 7th. First of all, I want to briefly go over news items, economic data, and events. And then I'll, again, focus on the liquidity and heat map. I want to go through my positional analysis, and I'll review some setups earlier today. Then we'll get to the live market and look at plenty of examples. And also for a liquidity and heat map, I have some previous examples as well. So you can understand how I use liquidity when we look at the setup review from today and the live market. All right, let's get started. And I'm going to start, first of all, with news items. First, fortunately, it's a very slow week today. The only news item is the FOMC minutes released on Wednesday at 2 p.m., and that will be in the middle of my session, and I will stop whatever I'm doing at 2 p.m., and we'll cover I mostly look at the S&P 500 to see the reaction to the FOMC minutes. All right, so let's move on now. Let's focus on liquidity. I'm going to take a quick look at the live market, plenty of examples today. All right, so liquidity. What is that? That is the passive orders in Bookmap. Those are limit buy and sell orders. So Bookmap separates out aggressive orders. Those are market orders shown with the volume dots, and passive orders shown in the heat map. So the heat map is showing a history of limit orders in the order book. Let me grab my pen tool. Give me just a moment. All right, so the heat map, again, shows a history of limit orders in the order book. So this is the current order book right here, showing the limit orders in real time. And then the heat map is showing a history of the limit buy and sell orders. And this is where traders want to buy and sell. So you can see right here the current buy orders, limit buy orders, and this shows when they were entered the order book. So a lot of these limit buy orders came in right around 1 p.m. Eastern Time. And they still remain in the order book. So some of the orders were lifted, then they came back in. So they're currently still in the order book. All right, so that's the passive orders. And again, the volume dots are showing, these are market orders. And I have set my colors. So the green shows buy orders, more buy orders than sell orders. And the magenta dots show more sellers than buyers. And the way I use liquidity in the heat map is profit targets, and they can also act as support and resistance. So there's plenty of examples here. And before I go into the setup review from today and more live examples, I do want to take a look at some screenshots that I have gathered from previous setups to get an idea of how I use the liquidity in the heat map. And I have 10 screenshots here from previous trades. I do post these in Discord and also on X on a regular basis. And this shows just one of the basic uses. And I'm going to focus mostly on stocks here. So this shows one of the basic uses of my basic uses of liquidity at the heat map as profit targets. And typically for stocks, these limit orders come in at the cash open or maybe a minute or two later, and they act as profit targets. That's what I'm showing with the number 6 here, profit targets. And the buyers are seeking sellers, and they find them at the round number levels there. All right, so that's AMD. Note also the resistance there, kind of an intermediate target at 135.50. All right, so that's the first example. Next example. And this is Circle. This is a recent IPO. It is a thinner traded stock. And I'll show you another example that I actually talked about this last Monday in my webinar. Circle is not very liquid, really. And my experience is these stocks that are not as liquid, and also I talked to Bruce about this, the Nasdaq, which is not as liquid as ES, NQ is not as liquid as ES, often reacts at the liquidity levels as well. All right, so this is a kind of a bigger view of Circle, showing liquidity again, acting as targets, shown with label 4 there. And note these lines, these are at the 5-point increments. So Circle, a big mover, typically, and certainly that's the case for today. Some more targets. And the final target, note the front runners here, just right around 249, just below the big round number, the 250 level. And that's absorption at that level. Those orders were not consumed. All right, so again, another example of profit targets. All right, next example. This is the example that I talked about on last Monday. This was a trade that I put on in Circle, a scalp. And this shows the huge advantage of Bookmap over candlestick charts. You're just not going to see this kind of reactions in a candlestick chart. And again, this is Circle, not as a recent IPO, not nearly as liquid as stocks like Nvidia and Tesla, and it reacts very well to these areas of liquidity. And this is happening pretty fast. This is a quick scalp. You just have to be fast and realize how the stock that you're trading reacts to this liquidity. So this is a great example. Support here, good entry point for long. Also lines up with kind of this lower point of the market pulse price change indicator. And I was looking for longs here. And this was, and the total context here, this was a period of consolidation. So Circle had reversed higher, was consolidating and slightly grinding higher. Looks like it was ready to break out. I was looking for long. So here was my long entry at this level of limit buy orders. Then I took a profit target right before the round number. That was my first exit. And then I did front run the liquidity at 189 for my second exit. But this was a great clue for an entry here. So again, at the liquidity level, it had already been tested once, price. So I put my limit order in. It came back down. That was filled. I did move it up just a little bit. I didn't really need to. Note also that lines up with the extreme market pulse price change indicator. All right, so next example. And again, this is CrowdStrike. Not as liquid as Nvidia and Tesla. And what this was a bullish opening drive. Whoops. Bullish opening drive. And that was driven by call buyers and put sellers. Note as the liquidity comes in, you can see all the limit sell orders in the order book. The rally slows down with all those sellers up above. And that's shown with the 5 there, the targets. And then finally the rally stalls at the final, actually not the final target, at 415. Again, this is moving in 5-point increments. So bullish opening drive, and then the limit sell orders slow the rally down. All right, next example. This is INQ, another stock that is not as liquid, again, as some of the Mag 7 stocks. And this is showing targets. So here's a breakout. This number 3 here, breakout in this consolidation. And INQ heads up to these liquidity targets, shown with the number 5. And then finally reverses lower before the final one. That's the 45 call wall. And that is a strike that is expected to act as resistance. And traders were front running that. All right, next example, Meta. And I've got a few examples. Support there. Now, of course, I was looking for a short here. And price finally broke down from this consolidation and hit the liquidity targets below. So no, around this level had acted as support before, and then price broke through that level, hitting the targets at 525 and 520. And again, note the liquidity comes in at the cash open, and this is very typical for stocks. This liquidity will remain in the order book until these orders will remain in the order book until they're filled. All right, next example. Oops. All right, here's Oracle. Again, price targets shown with label 6. High liquidity at the 5s and the 0s. Absorption at the 202 level. All right, next example, Palantir. Note the resistance at the 125 level. Absorption, and then price finally broke through. You can see all those limit sell orders at 125 were finally consumed. So that was the first price target, and then the next price target at the liquidity at 126. Another example with Palantir, multiple price targets. Primary target, or actually the primary target at the 130 put wall, and note all high liquidity at that level. All right, final example. This is one futures example. And this is RTY, a futures contract that many people may not be familiar with or may not trade. It is definitely tradable. And what I wanted to point out here is something that I have noticed in RTY. So as the RTY starts to rally, these limit buy orders come in and support price in these consolidation areas as price moves higher. So that gives you a good clue that price has the potential to move higher when all those buy orders are just down below price, helping to support price. You know the buyers are down there below. All right, so those are the examples. Any questions so far? All right, let's move on to the live market now. And I want to quickly go through my positional analysis, and then we'll get to the live market. All right, so again, I want to show this, focus on liquidity in the context of everything that I typically do. All right, so let's go back. This is the S&P 500 futures, ES futures and Bookmap. And what I want to do is point out, actually before I take a closer look at this chart, I want to step back, take a look at a higher time frame. I'm going to start with SPX. This is the underlying index for the S&P 500. And just a quick comment here. This rally began right after the June expiration, shown with this red line here, and then the recovery from the drop right around February expiration was complete last week. All right, so that's an SPX chart, 1 year, 1 day data. All right, let's take a look now at a closer time frame. This is a 30-day 1 hour chart. And this is showing big rally last week. And it stalled last Thursday before the 4th of July holiday, and now moving down today. Well, let's take a look at the levels on this chart. First of all, the expected moves. This is shown with the weekly expected move, shown with the dashed purple lines. This is based on the options market, based on the closing price for SPX from last Friday. So again, that's based on the options market, this is what the options market expects the expected range. That's what the expected range is for the week. Those levels remain in place for the entire week. And then the dashed blue lines are showing the lower and upper daily expected move. So actually, this is based on data from last Thursday. So note that SPX is now trading below the lower daily expected move for today. And again, I do post those levels in Discord every day the evening before. So I did post these levels in Discord yesterday afternoon. All right, then the dashed red lines are showing Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, the put wall is at 5,500. That's the strike with largest net negative gamma that can be expected to act as support, and that's certainly not in play for today. Next level up is the absolute gamma strike at 6,000. That's a strike with largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. The next level up is the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note that is based on Spotgamma's older model. And we'll take a look at a view of gamma based on the newer model in just a couple of minutes. All right, then finally the call wall, and that level did shift down from Thursday, so that's slightly bearish. Then the call wall remains at 6,300. That's a strike with largest net negative gamma that can be expected to act as resistance. So if price moves up, that is the next level in play, and that's for SPX. And again, I'm focusing on SPX levels when I'm trading and SPY levels when I'm trading any form of the S&P 500, where it's whether it's SPY options, SPX options, or ES futures contracts. All right, let's wrap up our view of SPX with a 1 minute chart. All right, so there are really no SPX spot gamma levels in play for today. But the level that has been in play is this lower daily expected move. And note, this is for SPX. I do calculate SPX and ES expected moves differently. So this will not appear on the chart, but it's definitely been in play for today. The SPX lower daily expected move acting as support, then resistance. All right, so that's a 1 minute chart. And we can zoom in on this chart just a little bit. So again, the lower daily expected move for SPX, definitely in play for today. And let's wrap up, let's take a look at the SPY chart. Just want to point out, this is the SPY 624 volatility trigger, and that level acted as resistance just after the cash open at 9:30, just after 9:30, and then at 10 a.m., setting up a great entry point for a short. All right, so those are the levels for the S&P 500. And note, I do post the SPX and SPY levels on my chart. So here's the SPY 624 volatility trigger acting as resistance just after the cash open, and then again at 10 a.m. and setting up a great entry point for short. All right, I talked about shifts in levels for SPX. Volatility trigger shifted lower, and for SPY, the volatility trigger and call wall both shifted higher. All right, so that's the S&P 500. I'll talk about setups in just a couple of minutes. Let's move on to Nasdaq. And for Nasdaq, there were no Spotgamma levels in play earlier today. There was later on today this QQQ 551 zero gamma level. And note, I do post the index relationships. They change a little bit every day. So the ES to SPX offset, for example, is at 46 today. So if there were any SPX levels to show on my ES chart, they would show at an offset of 46 points. So that means that, let's say, for example, SPX 6200 would be at ES 6246. All right, there's Nasdaq. The only level in play for today is the QQQ zero gamma level, shown right here, acting as support. All right, so those are the levels of play for today. I've got some liquidity examples highlighted there. All right, let's wrap up positional analysis by taking a look at gamma. All right, so again, I use Bookmap and Spotgamma, order flow in Bookmap, hedging flow in Spotgamma to develop a thesis as well as set up trades. So what Spotgamma is doing is showing how the many various forms, showing how the options trades are affecting equity markets and also the futures markets. So what this chart is showing, this is the trace heat map, gamma heat map. This is available to Spotgamma subscribers. The red shading is showing negative gamma. Again, remember, negative gamma, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. And that's shown by the red shading. And then you can see a pocket of positive gamma. That's the blue shading down below. And this should act as support, where market makers in positive gamma are trading against price. So they're buying dips and selling ribs in positive gamma. So we're looking for support in this area right here. This is focused on this is for SPX, focusing on the 6220 level. All right, so let's take a look at some setups now, and we'll again focus on what options traders are doing as well as liquidity and the heat map. All right, so focusing first of all on what options traders have been doing today. Again, for those of you who may not be familiar, so what we looked at in Trace was not quite in real time. It's updated every 10 minutes. And this is updated in real time. So this is showing options trades and market maker hedging activity in real time for the S&P 500 index components. That's SPX, SPY, ES Futures, and XSP. So the white line is price for SPX, and the purple line is the hero signal. And a falling hero signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. Market makers take the opposite side of those trades, and they will sell futures to hedge their delta exposure. Market makers always want to remain delta neutral. So if they are taking negative delta options positions, they have to, if they're taking positive delta, or they're taking, so they're taking the opposite side of these negative delta options trades. So they have to sell futures to hedge their delta exposure. All right, so there's another hero signal that we can take a look at for the S&P 500. That is the S&P 500 index, or equity signal. And this is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And this is much more clear. Typically, this index signal is a little bit more noisy and shows the turning points a little bit more clearly, whereas the equity signal often shows the entire the overall direction a little bit more clearly. Now I can separate out puts and calls. So what this is showing, the orange line is showing calls, blue line showing puts. I'm going to have to jump to avoid the auto zoom, jump back. All right, so what this is showing, this falling orange line indicates traders are selling calls. The directional line is in terms of option delta. Traders selling calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. The blue line is showing puts, also falling, showing traders are buying puts. Again, market makers sell the puts, that positive delta. They have to sell stock to hedge their delta exposure. All right, so let's go take a look at Bookmap. Take a look at the S&P 500. All right, so again, remember I talked about that reversal at the volatility trigger. Whoops. Let's zoom in on this just a little bit. So the volatility trigger is a level that often acts as support and resistance. So I expect that level, when tested from below, to act as resistance. And that's exactly what happened. So the S&P 500, as traders were taking negative delta options positions, continued to make a series of lower highs. And we'll take a look at some liquidity examples here. First example, right here, and this is right around 62.90. Limit sell orders. Traders can't move above that. Looks like those orders were consumed, but they did come right in again, and then a final test of that level, 62.90, and price broke lower. That must have been news right there. I was actually making lunch, so I didn't hear the news. Didn't have time to check on that. That must have been news. Note also the limit buy orders in the order book, acting as support there. They were consumed. More limit buy orders come in. And then after this sharp move lower, price sliced right through that level. Then finally finding support right around 62.62, something like that. Let's see. Yeah, right around 62.62. And note there are some limit buy orders here. Also, again, remember the positive gamma that was shown in the trace heat map, acting as support. Let's go back to that. All right, so putting together everything, First of all, I'm expecting support in this blue positive gamma zone. Let's take a look at the hero signals now. Let's go to the SP equity signal. Let's go back to the total signal. You can see how it is starting to flatten out now. So the options traders, call sellers, put buyers have taken the foot off the gas. That's the equity signal. And the index signal, still choppy, but slowing down. And then again back to Bookmap. Some limit buy orders coming in. And now price finding support again right around 62.60, trying to move up. All right, let's take a look at Nasdaq. Then we'll get to some stocks. All right, so Nasdaq, few examples of liquidity acting as support and resistance. Let's see what options traders have been doing. All right, so for Nasdaq, just like the S&P 500, there are two hero signals that we can take a look at. First is the Nasdaq index signal. That's showing options trades and market maker hedging activity for NDX and QQQ. So that is the hero signal, the purple signal, and the white line is price for NDX. Then also we can take a look at the Mag 7 hero signal. I use that for Nasdaq. So what this is showing is traders have been taking negative delta options positions in the Mag 7 stocks, which are a very large component of the Nasdaq, also the S&P 500. So this is showing, again, price, this time for QQQ, the white line, and then the purple line is the hero signal, again, for the Mag 7 stocks. That's Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla. And you can see now it has slowed down, flattened out. So the options traders have taken the foot off the gas and price is consolidating. All right, back to Bookmap. So there's Nasdaq. And again, support at the QQQ 551 zero gamma level. So there was a very nice drop from right around NQ 950 down to 850. So 100 point plus drop very fast. All right, so that's Nasdaq. Let's take a look at some stocks. So here's Apple. This is not really much of a liquidity example, but this is the type of setup that I like to look for based on hero. I'm going to shift back to puts and calls. Let's go to Apple. Let's zoom in on this. And I like to look at these hero patterns, again, for those of you who may not be familiar with the way I trade. So I'm watching order flow in Bookmap and hedging flow in hero at the same time on different screens. This is a very, very reliable bearish reversal pattern. This is a bearish call peak pattern. Note the flow alert signals significant options activity and also a potential reversal in hedging flow from briefly bullish to negative. That's exactly what happened. Positive delta to negative delta. Traders buying calls. Price moves higher. They start selling calls. Price reverses lower. Breaks below the 215 call wall. They expect to act as resistance. Nice entry point for short. Traders selling calls. Market makers buy the calls. They have to sell stock to hedge their yield exposure. So by taking a short there, all you're doing is following the market makers. And traders continue to sell calls. So that's Apple. Very nice bearish setup. And here's your primary price target. So if you entered at 215, price target at 210. So that's a pretty good move for Apple, 5 points. Liquidity at the 210 level. All right, next stock, Google. The bearish opening drive. Let's take a look and see what options traders are doing. In the case of Google, they were selling calls and buying puts. So that's a bearish opening drive and bearish momentum with both the blue line and orange line moving in the same direction. And again, flow alert comes in just after the open. Get your attention. You see the call line reverse lower. Blue line moving lower, you're looking for a short. Multiple entry points, pullback entry points, below VWAP for a short. And the primary price target is the high liquidity at 175. All right, that's Google. Next stock, Meta. Let's go to Hero. See what options traders are doing. All right, so this was a bullish opening drive. Traders buy calls, support at the 715 put wall, price versus higher level that you expect to act as support. Flow alert, traders buy calls, sell puts. And then note the rally stops as the call buyers take the foot off the gas. So the call buyers, put sellers. So the put sellers take the foot off the gas, call buyers slow down, and now Meta consolidating. So this is a bullish opening drive, bullish momentum, and then call exhaustion. Let's go take a look at Bookmap. All right, support at the 715 level. That's a put wall. Typical price action for Meta, very strong, bullish opening drive. And price doesn't quite make it initially to the 725 liquidity target. Again, very typical for stocks. These liquidity levels come in, limit sell orders come in at the cash open and typically remain in place until they're filled. These do come in a little bit later, but acted as resistance there. Initial absorption at that level, and then those levels, those orders were consumed. And that's when the consolidation began, as again, the put sellers and call buyers took their foot off the gas. And Meta finding some support right in the middle there, right around 720. All right, that's Meta. Let's take a look at Tesla. Of course, Tesla in the news over the weekend is the Elon Musk soap opera continues. All right, so some good liquidity examples here. Let's see what options traders were doing first. So it looks like so of course, Tesla did gap down pretty substantially. Let's see, it's still trading down for the day. Around 7%. But it is a little bit up from the open. So let's see what options traders have been doing. So let's go to Tesla. All right, Tesla is often very responsive to options traders, and that is certainly the case for today. So let's zoom in on this just a little bit. So this is, first of all, a bearish opening drive, not a strong move lower. But again, traders selling calls, buying puts, flow alert comes in. And note, right before 10 a.m., traders start selling puts, buying calls, price reverses higher, and then one more reversal lower. So when this was a bearish opening drive, also bearish momentum, bullish momentum, and then bearish momentum again. Again, that's momentum trades when both the blue line and the orange line move in the same direction. All right, so that's Tesla. Let's go back to Bookmap. And some examples of support and resistance at liquidity. First of all, right here, 10 a.m., that was the reversal, or just before 10 a.m. As traders shifted from negative delta, options traders shifted from negative delta to positive delta. Price reversed higher, sharply higher, broke through the 295 level, and then found some resistance at the liquidity at 296, back down. So we're following the options trades as well as the liquidity clues here in Bookmap. Support right at 289, liquidity limit buy orders in the order book. Resistance at 296, few limit sell orders. Then again, a limit buy orders at 290.50. Then finally support at 291. Another liquidity example there. So it looks like these limit sell orders at 294. Support, they were consumed right around 12 noon. Came back in, then resistance. Looks like a key level for today. Support, then pre-market, then resistance. All right, let's take a look at a couple of other stocks. Now, if anybody has any questions or stocks they want me to take a look at, please let me know. I'll be glad to do that. Let's take a look at AMD. Let's see what options traders are doing. So for the past few weeks, AMD has been very strong, recovered from a long downtrend. Let's see what options traders have been doing today. So today in AMD, this was a bearish opening drive, bearish momentum, traders selling calls and buying puts, and they took the foot off the gas right around 11:30. Now AMD consolidating, trying to move higher. Back to Bookmap. A couple of liquidity examples. Some support here at 135.50. These orders at 135 were consumed. Price broke through that level, down to the liquidity at 134, 134.80, 134.50. Finding support at that level. All right, so that's AMD. All right, let me, one more stock I want to take a look at, Palantir. Plenty of liquidity examples here. All right, so for Palantir, note that 133 is the hedge wall. Very similar to the volatility trigger, also expected to act as support. So looking at the volume dots here, you can see the sellers were exhausted. Some smaller magenta volume dots, aggressive buyers start to come in, price moves higher. And then heads up toward the liquidity targets, 136, 37, 38, 39, with a prime target up above at 140. And let's see what options traders are doing. Go to Palantir. So you can see price is primarily driven by call buyers today. That's shown by the rising orange line. Again, when traders buy calls, market makers sell the calls, they have to buy stock to hedge their delta exposure. Support at the 133 hedge wall, a level that is expected to act as support. Price did break down below that level, but now trading higher, so that level did its job, acting as support. Note again that 140 level. Remember all the high liquidity at that level. Limit sell orders. That is the 140 call wall, and also the key gamma strike, a level that is expected to act as resistance. And the call buyers have taken the foot off the gas, really right around 139 before AMD could reach that 140 level. Here's an example of liquidity acting as support. Initial resistance, then the buyers broke through. Again, initial resistance, buyers broke through. Now the 139 level, liquidity there, absorption at that level, continues to act as resistance. All right, any questions, any stocks, anything, does anybody have anything they want me to take a look at? All right, let's go back. Let's take a look at, check the indexes first. Go back to the S&P 500, which is now broken down through that 6260 liquidity that I talked about earlier, acting as support. So now breaking down through that positive gamma zone. And you can see all the aggressive sellers here, large magenta volume dots. Let's zoom in on this. All right, some angry sellers here. The SPY 619 zero gamma level, briefly acting as support. Price breaks below that. Now heading down, this is now we have an SPX level in play for today. That's the 6200 level. Again, remember the offset that I talked about. So that is the SPX 6200 large gamma 3 level. That was noted as support in the Spotgamma M founder's note, and that is at ES 6246 due to that 46-point offset, which I do post in Discord every day the evening before. So let's take a look at the subchart here. You can see that there are some large traders coming in, buying this weakness with iceberg orders. That's shown by the light blue line in the subchart there. So large traders are now coming in to buy the weakness. Let's zoom out. Let's see what they've been doing before. All right, so most of the day, large traders have been selling with iceberg orders. That really started somewhere between 12:45 and 1 o'clock. Large sell iceberg orders. Now it looks like they're actually starting to come in and buy, and a lot of series of smaller buy orders. All right, let's check Hero and Trace. All right, back to Hero. I'm going to shift to the total signal. We'll start with the equity signal. So remember that head was consolidating for a while. Now it has broken lower, so traders have resumed selling calls and buying puts in the S&P 500 equities. Oh, Shark Blue asks, is there a circumstance where you front-run liquidity, large liquidity as an entry? Yeah, I showed that circle example. Let's take a look at that. So what I did, let me see if I can find that. I'm going to go back. So there it is. All right, so this is scalping, very fast trading circle, pretty not a very liquid stock, jumps around quite a bit. So I was looking for a long. So I saw this liquidity, and I put my order in, also timed with the market pulse price change extreme there, and I was like a millisecond too late, so I just put my order in at the liquidity. I ended up moving it up just a little bit to make sure I would get filled. So there I was trying to front run that liquidity. It looks like I did not need to, but there's a case. Let me zoom in just on this a little bit so you can see. So I did attempt to front run that liquidity right there. And then I always like to front run liquidity for my exits. You know, again, I didn't need to do that. I could have just moved my limit, my sell order up to 189, but I did front run that a little bit. But typically, as far as front running, I do front run liquidity for exits more often than entries. All right, let's take a look at all right, so this is the index hero index signal. Looks like the S&P 500 SPX did break down below this Spotgamma implied one-day move low right here. Now this is based on the opening price for SPX. The expected moves that I use are based on the closing price from the previous day, and the Spotgamma implied one-day move is based on the opening price for SPX. Stark Blue says, I see that book flipping a lot. Gratitude, Duck, much appreciated. You're very welcome. So I hope that that answers your question. All right, so looks like now S&P 500 may be finding support. Let's check trace. I'm going to zoom in just a bit. All right, so now trace down toward the bottom of this positive gamma zone, down below the Spotgamma implied one-day move low. So for a long time, support, then a breakdown. There might have been more news. But now the next large positive gamma zone level is at 6210, so that would be 6256 for ES. So let's go check that. All right, so price did break down below that. So again, almost down to the 6200 level. So let me just show you on the SPX 1-minute chart. There's that 6200 level just down below. So price continues to move lower. That is definitely the next target. And let's see, check Nasdaq. All right, so Nasdaq finding support at the QQQ. You really can't see the label there, but that is the 550 absolute gamma strike, and that's just below the NQ 22,800 level. Let's zoom in on this just a little bit. Let me darken up the heat map. All right, so you can see the limit buy orders that were front running the 22,800 level. And then some buyers down below that 22,790. and up above here, just above the QQQ 552 level. Limit sell orders pressing down on Nasdaq. All right, so it looks like the orders at 790 were consumed. Let's see what's down below. So down below the QQQ 549 volatility trigger. And a little bit of liquidity right here at 760. All right, last call for questions, comments. We'll do one last check of ES, see if that 6,200 level is going to hold. All right, again, last call for questions, comments. All right, everyone, my time is up. I want to thank you very much for watching. Everyone have a great afternoon. Remember, I will be doing my normal webinar on Wednesday, 1:30 p.m. Eastern Time. That will be in Bookmap, Discord, and on YouTube. And I will, again, cover my normal content, and we'll focus on the FOMC minutes at 2 p.m. All right, again, everyone, thanks for watching. Have a great afternoon, and I hope to see you on Wednesday. Thanks. Bye.